You know what? In 2024, people confuse assets for liabilities, especially when it came to designer clothes, timepieces, and houses. So in today's video, I'm going to tell you the differences between an asset and liability and give you exact examples. Starting out with assets. Well, first of all, what's an asset? What's a liability? An asset is something that makes you money over time or has the potential to make money over time. But then you have a liability, which can actually make you lose value all the time or a majority of the time. So we're going to start off with assets, things that can make you money. Number one, cars. But I'm not saying the one that you drive. Your Toyota Corolla that you drive every single day, or the Lamborghini Aventador that you drive every single day, don't rent out and you just maintain it and it's your daily beater, which can be fine. It doesn't matter what car it is, it's still a liability. Even if it's a Bugatti, if you drive it every day, it's a liability, which is fine. I mean, if you love supercars, then go ahead, buy one. But cars that you don't rent out will lose money over time. That's a fact. Then you have houses that you also rent out, because what's the point in living in a house and saying it's an asset when really it's just a liability? What are you going to do? Even if the property value goes up. In my area, our property value doubled because of construction and the housing market. It doubled, right? Here's the thing though, when it came to property value, what are you going to do? Even if we live in this house, we have no other house. Why would I sell this house because I made double the money? Yeah, I made double the money. And especially with how the housing crisis goes, where am I going to go, right? So especially when it comes to the house, and it's only an asset if you don't live in it, but it can also be an asset if you rent it out, if you put it on a mortgage and you rent it out, or, put it on Airbnb. If you're in Florida, maybe you can do that. Then you also have timepieces, but I'm not talking about those fancy iced out Travis Scott watches, which, some of them look pretty nice, but let me tell you, a Rolex GMT or a Submariner or a classical Daytona will definitely last longer than any of those watches in the future when it comes to value-wise. Because think about it like this. A watch that has no diamonds on it or very little diamonds is typically made out of very, very solid materials, okay? Such as gold, platinum, silver, and other materials, right? All of those materials gain value over time. It's a proven fact, and it's going to happen time and time again, especially with currencies being inflated and such like that. So that's why. But then you have iced out watches which lose value because it's just watches don't last over time. I can buy a Submariner from 1995 and it probably will look just as good. But if I bought a diamond watch, probably from the same era, it wouldn't have the same classical feel because those watches are not timepieces. They're called timepieces, especially ones that last over time. They're called timepieces because they'll last through time. And iced out won't. Okay, so keep that in mind. Then you also have the basics like stocks, crypto, ETFs, which can all make you money in the long run if you do it right enough. But then you have other things like a laptop. Now think about it like this. If you're doing what I'm doing, if you're running businesses, if you're running a YouTube channel, or if you're doing something like that, right? Anything that can start making you money, it's technically considered an asset. While this laptop, we bought it for in $2,000 when we first got it, probably barely worth $1,000 trade-in now. It's still technically for me an asset because I run my own businesses on it and my stocks and my crypto. So for me, that can help me make money. So that's why it's an asset, right? And for you, it could be your phone. For you, it could be your PS5, your Xbox. Hell, it could be anything that you make money on. If your whole brand is a water bottle, this water bottle can be your asset. I love Yeti. Anyway, so yeah, those are basically assets. Anything that can make you money, okay? Maybe not directly, but can definitely make you money. But then what's a liability? A liability is the car you own and use. Like I said, doesn't matter if you're driving a Bugatti, Lamborghini, or a Toyota. It will all go down in value and won't make you money if you're not renting it out. Which I said, it's fine again. If it's your daily beater or if you just love driving supercars all the time, you know what? I have no issue with you. And I would probably do the same thing. Then you have the house that you live in. Like I said, you're not going to just liquidate your house just because it doubled in value. Where are you going to go unless you have plans to stay at an already place that you paid out. Then you have iced out watches, which I already listed. Then you have a laptop that doesn't make you money. And then you have money just sitting in the bank. So money sitting in the bank, and a lot of people don't understand this, is that even though you might have a 2% interest rate, right? You might be saying, oh, I'm making 2% every year. You're only losing 3% of your money every year. Think about it like this. Inflation, let's assume, is at 5% per year. And your savings account that says 2% every year, you're just minimizing your losses at that point. So when it comes to saving money, when it comes to trying to grow your wealth exponentially, you want to have it in something like crypto, stocks, real estate. You want to have it in something that you can make money in. Or hell, your business. Throw it all in your business. Why would you save? Of course, save some. If an emergency happens and you need immediate cash, you don't want to liquidate all of your business. So you can have it in an emergency savings account or a high yield savings account. Especially for someone who's young, it's good to have a high yield savings account. Or like I said, just have a bunch of assets. My dad uses Acorn for me, which invests automatically in stocks and ETFs. And let me tell you, it's pretty up. And we did not put that much into it in the first place. So those are basically assets and liabilities. But let me tell you some new assets that are coming out. And this is going to be more value than your houses. It's going to be more valuable than your cars. It's called the passport, citizenships, and visas. Think about it like this, right? In 2024, the biggest freedom is not just to be able to buy a car on demand. Anybody can do that now. But the thing is that a citizenship grants you opportunities that you can never imagine, right? Let's take Dubai, for example, right? If you're working with someone in Dubai, when it comes to AI, you have to get a citizenship eventually, right? But with that citizenship, or residency as they call it, you start working with people and you start networking with the higher individuals, especially if you manage to get a citizenship. Anybody who knows a Dubai citizenship, or anybody who knows how hard it is, it's really hard to get one. However, the access that you get to the country, the people, especially the ruler of Dubai, it is amazing. I won't list out any personal examples, but there are some I know that, if you get a residency, let me tell you, it brings you a lot of benefits. You can also buy property in other countries, right? And then you also have the cost of living in other countries is lower. Like in Portugal, food is definitely a lot less, maybe it's not a lot less price, but it's definitely less, and the quality is definitely more. So you can save money there, but you can also use that as your access, right? The United States is in such a tricky position when it comes to its currency, right? Let's say, because the way that the currency works, right, they're constantly inflating it. It is super, super, super hard for them to deflate the currency. So let's say World War III breaks out and they start printing money. Like, it does not matter. Have a citizenship in Switzerland and be ready to move there in an instant. That's the new currency. Why? Or the new asset. Because it's going to work for you. It's going to make you money. It allows you more access. So that's, at the end of the day, what it is, right? Anything that can get you more access to things that can make you more money. So in that case, if there's if there's a bunch of rich guys who just love Land Cruisers, if you buy a Land Cruiser to get in that club, hey, that Land Cruiser might lose value, but guess what? You gain value because you are networking with other people. You are going to different places. That's why citizenships are so much more valuable than what is now physical cash. And at this point, having physical cash is only good if you want to buy something on the spot, which is, of course, you're going to want to. You're going to see that Subway and you're going to think, I want that foot long for some reason. And you're going to go in and buy. What are you going to do? Gonna go into Coinbase, you're gonna sell. Oh my god, I have to sell at the right time. Hey, give me 20 minutes, I need to wait for this buy signal or the sell signal. No. So it's good to have some onboard cash, but a majority of the time you really, really, really only want assets. Okay, so that's it for today's video. So yeah, be ready for the next upcoming economic changes. Get a second citizenship, get a second passport, get more assets, put it all into your business. So yeah, thank you guys for watching. Comment, like, and subscribe. I'll see you all later.